They say history does not repeat itself, but it certainly rhymes. Having learned from the 2008 experience, everybody's worried about 2023 again. Is the tape being replayed?
Thank you, Nikunj, and it's always a pleasure to be here on ET Now with you. Yes, I agree in the sense that it's pretty much echoing the same kind of sentiment, the same kind of noises that we saw in 2008. We're hearing something similar. Just that I don't think it's going to be as drastic as 2008. I mean, 2008 was a terrible year where I remember that the headline indices itself probably corrected by 60% or so from the peak to the bottom. So I don't think it's going to be as bad as that. Okay, and I clearly believe that a lot of the signs, a lot of the kind of playbook is already evolved and it's already out there. So I don't think the impact is going to be as bad as that. But having said that, could we be in for some more extended period of consolidation? Quite possible. That's quite possible. We really don't know. I think the biggest uncertainty is still going to be about what US Fed does. What is the stance of US Fed on both liquidity and rates? And that's going to decide whether for the rest of the year we are going to have a risk on trade or not. I think that's the key variable. Otherwise, I think there's really nothing much else to worry about, especially from a point of view where the markets are today. I think from that context, I don't see there's too much reason to worry.
Nilesh, I distinctly remember the subprime crisis started in 2007. When it started, financial market watchers, they coined a term called decoupling. In 2008, they realized that it's a flat world and everything in a sense is joined at the hip. What are the chances that right now what appears like a storm in a teacup actually in hindsight will be much bigger than what it is right now?
Well, it could be a tad bigger because, whatever challenges that we have faced, especially what have come to the fore in the course of last maybe 3 to 4 weeks, both in the United States and in Europe, that's something which could pretty much catapult into something which is much bigger than what it is even today. But will it be like 2008? Very unlikely. I probably think it would be more like 2013, which was obviously not a great year. It was actually a terrible year, 2013, but was not as bad as 2008. So I probably think that 2023 could be more like 2013 and not like 2008. I think in 2008, you actually saw a huge, massive global sell-off, capitulation, and the damage was huge. I mean, we've never seen indices go off by 60%. I don't think we're going to see anything similar like that in 2023.
Okay. Now, post 2013, we saw a rally in mid and small cap stocks. Mid and small cap stocks have done rather poorly, if I say, the last 2 years.
Yes.
So, if you're of a 2013 kind of a scenario, could the reflation trade be there in some of the mid and small cap stocks?
Quite possible. And what you could see is that some of the mid and small caps could probably still gravitate a bit lower from where it is today, especially depending a lot on what the US Fed does in terms of interest rates, because that decides the risk on trade or not, whether we are in risk on or risk off. But assuming that they do correct a bit more from where we are today, I clearly believe that going forward from 2024 onwards, you're going to see a massive reflationary trade happening in mid and small caps. Valuations as it is have become reasonable. With a bit of more correction, they become even more attractive. I think the pressures in terms of raw material prices, input prices, they have started to abate. We're seeing crude from $140 down to $70 a barrel. Interest rates probably have peaked, at least in India, they look like having peaked. The Reserve Bank of India has been saying that the inflationary pressures are behind us. In fact, there's a stability report of theirs where they've reaffirmed the growth for FY24. So I think fundamentally, we seem to have hit the bottom, fundamentally. If prices were to correct a bit more, especially on the mid and small caps because of global reasons, I think we're set for a very, very strong rally in 24. The other thing which there may not be a causal effect or a cause and effect relationship, but 1 year prior to the general election in India is typically not a great year. Rewind, 2019 was the election year and 2018 was not a great year. Rewind further, 2014 was the election year, 2013 was bad. 2009 was the general election, 2008 was bad. 2004 was the general election, 2003 was bad. Fast forward, 2024 is the election year, we are in 23. 23 for now at least is not looking all that great. Okay, so I think investors with a 1 year plus horizon and with the conviction in India's potential, I think will be hugely rewarded 2024 onwards?